So far in 2025, gold has significantly outperformed the broader market index as market investors right now flock to the safe haven. For those looking to add gold to their portfolio, is it too late to buy in? Joining me now to discuss, we've got Bobby Iaccino, Path Trading Partners, Chief Market Strategist and co-host of the Futures Edge podcast. Bob, always a great pleasure to grab some time with you. First, let's answer that question. Is it too late?
Well, I'll say this. It's not necessarily too late. I just know there's going to be a clear signal as when the turn is going to come. Whenever something has gone as far as gold has, we talked about buying it in November of 2022, and it's obviously outperformed literally for 2 consecutive years. If you exclude dividend, 1 year, including dividends, gold outperformed the S&P. And in terms of just raw returns, it outperformed the NASDAQ as well last year. The issue is that there's 3 regimes that are possible right now in the overall economy, and that's stagflation, recession, and reflation. Gold can perform well in all 3 of those. Stagflation, gold performs well. Recession, gold performs well. I think we're in a reflationary environment, meaning a resumption of inflation, but the Fed hasn't quite addressed that yet. And so when the Fed starts addressing that gold is doing what I see it doing, which is resuming its move into the higher stratosphere, then that's probably a time where it becomes too late. Because once the Fed is fighting inflation, that's when the so-called inflation hedge that a lot of people think gold is starts to expire.
And so where are we within the correlation of gold as an inflation hedge as we speak right now?
So a lot of things people don't realize, gold is an asset, just like stocks, just like your homes. And with inflation comes asset inflation. So when you're seeing inflation, you're seeing prices reflate. That applies to your home. It applies to stocks that you may own. It applies to a car you may resell, as we saw in used car prices recently. So gold is an asset that fits in that as well. It becomes an issue when you see the Fed start to fight inflation. And by the way, it becomes an issue in all assets again. If you all of a sudden see the Fed switch from this sort of we can pause on policy and wait, or if you look at the CME Fed Watch tool and you go to the probabilities tab, the market's still pricing in cuts. They're not even pricing in neutrality over the next 2 years. They're pricing in 2 more cuts. As soon as that goes away and it moves to 2 more hikes, or the Fed, in the form of Fed Chair Jerome Powell, of course, starts to talk about the idea that hikes may be the next probable move by the Fed, that's when you're likely to see all assets start to deteriorate a little bit. Gold is going to be a part of that and probably one of the early movers.
And so for people that are not buying gold specifically as the asset, we also saw last week gold-backed ETFs as an asset saw the biggest net inflows since 2022. Are ETFs the smartest way to hold gold in the portfolio?
Not in my opinion. So we have micro gold futures at the CME Group. If you're familiar with futures, if you're able to trade futures, if you're familiar with the roles of futures contracts when they expire, that's really the best way to invest. Again, micro gold futures, really, it's the pricing mechanism even for ETFs. When you see the Spider Gold ETF go through, they're usually pricing to the gold future. Having said that, a lot of people are nervous about futures. They don't understand the mechanisms of them. GLD is the best one then, because in that particular case, you're seeing something that mirrors gold the best. There's a lot of gold ETFs out there. GLD has the most assets for a very good reason. Then, of course, you can buy physical gold. There's several reputable gold dealers. There's also several unreputable gold dealers. I don't want to call them anything worse than that. So you just kind of have to do your research to buy physical gold, find the proper storage, or even store it in your own home. If you have physical gold, it is actually a liquid asset, more so than some of these other things we've discussed.
And so all of this in mind, is this still the best metal versus the others, especially given the run-up that we've seen in gold?
It is to me. So industrial metals have specific use cases. For example, copper had a really big run when the administration was pushing EVs as an inevitability because there's a lot of copper in electric vehicles. That's kind of shifted with the administration that we have now. So you see a little bit of weakness in copper. Gold is standard. You're just looking at inflation and whether the Fed is fighting it or not. Those are really the variables for gold. You can even use the dollar as a proxy for that. So gold is the best bet in my view. And I think a lot of people should have gold over the long term because there's one more advantage to gold that we haven't talked about. Gold is a safe haven asset in times of turmoil. So economic turmoil, military and geopolitical turmoil, gold's a safe haven for that as well, in a way that Bitcoin really isn't. A lot of people are talking about Bitcoin being a safe haven as well. It sort of is, but it's way too correlated to the NASDAQ right now on the positive side, in my opinion, to match the safety aspect of gold, not the performance aspect, but the safety aspect of it.
All right, you've given me a lot to think about for my gold constructed brick wall, similar to the one that's behind you. Bobby, thanks so much. Appreciate it.
Good to see you, Brett.